October was one of the best trading months for me. In this video, I'm going to break down how exactly the month went. What were the best setups for the month of October? What were some things that I could potentially improve moving forward? And how you could potentially integrate those technical setups in your trading journey and take it to the next level. With that being said, let's have a deep dive. This is how my month of October looks like. That platform I'm using here is TradeZilla, and we are going to break down all of these matrices in detail, right? So looking at these numbers, the most important thing to focus on is the risk to reward ratio. This is my risk to reward ratio for the month of October, around 20 or 19.44 or to be exact. Profit factor 3.62, trade win 75, days win 81.82%. If we have a deep dive on these numbers, this is how the month of October looks like. Overall, I traded 11 sessions. I did miss a lot on the sessions that I did not trade. And of course, there's an opportunity cost over there. Two big red days for the month of October. One day minus 4.56, second day 1 hour. Just did not really feel the market on those days. So with that being said, let's have a deep dive. And the most important thing, I'm going to break down my best setup for the month. This is how the picture looks like. As discussed on the numbers, 19.44 R. This is the most important thing to focus on because it showcases me, okay, for the month of October, depending on my risk, this is a reward for the month, right? Looking at the best setups on the month, and the first one was initial balance high, initial balance low, continuation setup. Second was technical level and squeeze. And third was point of control, acceptance or rejection. Now we are going to have a deep dive on those setups as well. So with that being said, let's first of all focus on the first one, which is initial balance high and initial balance low. Now, as an example, we are going to focus on yesterday's session and try to understand the context of the session. This is how yesterday's session looks like, right? Market overall, as you guys know, has been in a big squeeze mode. Yesterday, CPI numbers hit the market, and the moment the CPI numbers hit the market, we got a massive pump, right? Yields start trading lower, interest rates go lower, and S&P moves higher. The reason from a macro point of view, as you guys know, interest rates has been running like no tomorrow. So at this point, the focus is that if the Fed is going to raise the interest rates, right? And that is dependent on how the inflation numbers are. So yesterday, inflation numbers came and the numbers came much lower than the expectations. And the moment the numbers came lower than expectations, we started repricing the probability that the Fed is going to raise or not raise moving forward, right? So we got a big move in the morning. We opened around 44.90s, this area, and we get a big move on the upside. The setup that we are going to focus on is the initial balance high and initial balance low. Now let's focus on that. First of all, what exactly is initial balance? Now, initial balance is the order flow term, right? It basically refers to the trading activity for the first hour, right? As you guys know, US markets open at 9:30. Right? So trading activity from 9:30 to 10:30, this is your initial balance, right? High of the initial balance is basically the high of the first trading hour. The low of the initial balance is basically the low of the first trading hour, right? So if you look at yesterday's session, our initial balance is at 45.12.50s, right? This is your initial balance, high. And the low of the initial balance is around 44.80. So the price print that we got at the open. So once initial balance gets established, and the first thing to focus on is to determine where exactly is the IB high, right? And where exactly is the IB low. Why these levels are very important and why initial balance is very important, because within the first hour, most volume gets traded, right? So the assumption behind this is that big folks are active in the market. OTF, other time frame players, are active in the market. And once that balance gets established, if we break that balance, that confirms the assumption that OTF players are actually driving the market today. And as you guys know, at the end of the day, market is moved by big folks, right? Market is not really moved by retail folks. It is moved when big money comes in heavily, right? So this is the psychology behind initial balance. Now, going back to our setup, right? Initial balance high gets established around 45 at 1250, and lows get established around 80s area, right? Now, at this point, what I am looking at is market has established the activity within the first hour. Now, my point of focus is if we test that initial balance, how do we react around those levels, right? Because again, the psychology in here that the folks who established positions here, assuming that OTF is actually driving the prices today, when these levels get tested, they will defend their positions, right? So in the context of yesterday's session, as IB high gets tested, these folks will come in and defend their positions, right? So that is your entry point for getting aligned on the session, right? So at this point, one quick trade, very small trade, nothing big, 8 points trade comes in here. Once initial balance gets tested, folks come in here, market retests those prices, right? And that level is held and we get 8 points move on the upside, right? This is the setup which was very profitable for me for the month of October. And in my playbook, this is called initial balance high continuation setup, right? Again, the criteria is that initial balance gets established, price retests that level and holds that level very strongly, right? Again, the assumption is that the big folks, they are driving the market for the session. And once those levels are tested, price will hold those levels, right? So that is where the entry comes in. So this is one trade on the upside in yesterday's session, right? Now, once that trade is over, now again, you also have to look at the context of the session. Yesterday, initial balance high continuation trade did not give a lot of points. And the reasoning for that is the market already moved around 60 to 70 points on the session, right? That's a very exceptional session. That's why understanding the context of the market, understanding the context of the session is a very important. Once you have such a big breakout, let's say the market is already up 80 points, you can't expect initial balance trade to give you another 30 points because you also have to look at ATR of the market, right? ATR of the market means that, okay, on average, if the market is moving 30 points, if the day's range on average is 30 points, and today we are already covering around 60 points, you can't expect that the market is going to give you another 60 points above IB high, right? Again, depending on the context of the session. So yesterday, depending on the context of the session, as said, we already opened very strong. We already moved around 70 to 80 points. So at this point, this is a little technical setup trade that I was looking for and which worked out very nicely. Now, moving forward, again, this is one technical setup, one technical trade. Now, the second trade again kicks in, the market comes back and it tests the point of control. What is a point of control? A point of control is the area where most of the volume is traded for the session. So the point of control gets established at 45.06. The price comes back, tests the point of control and goes back above the initial balance high. Right now, again, this is another second confirmation, once again, that OTF guys, which means the big guys, are active in the market and they are driving the prices higher today. Now, again, once the price gets above the initial balance high, your setup kicks in again, which is IB high continuation setup towards the high of the day. So that is here another 10 points technical trade, which kicks in once the price gets above the initial balance high, right? So this is my initial balance high, initial balance low setup. Same applies on the downside. Let's assume that if the price were to break on the downside, this becomes your reference point. Why? Because again, the assumption is that the OTF folks, which means the big guys, are actually driving the prices today. And once the balance is broken, they will defend their positions, right? once the price comes back to retest that area, they will heavily defend their positions. And that is the big money. That is where you want to get aligned. That's where you want to position yourself. To sum it up, this was one of the setups that I traded last month and which worked very nicely. Initial balance high, initial balance low, continuation setup, right? This was my highest performing setup for the month of October. Now, once again, this is a setup that I have taken over and over again, have pretty good stats on it. This is a playbook strategy that has worked very well, right? Second setup, technical level and squeeze. This is another very strong setup in my playbook, which basically focuses on breaking a very strong technical level and going for the stops or going for the squeeze, again, depending on the context of the session. And the third asset, point of control, acceptance or rejection. This is another very good setup in my playbook, which worked very well for the month of October. Now, moving forward, as said in other breakdowns, I will have a deep dive on those setups as well, how technical aligns, what is the criteria for taking those trades and whatnot, and how you could possibly, integrate those sort of setups in your trading playbook, right? Now, moving forward, covering some other aspects of the breakdown, I like to write down every single thing, starting from the trading, starting from the setups, going into the mental, psychology, and health, and coming to a conclusion of what are the things that I need to improve moving forward. Now, the biggest opportunity cost was SPX, literally a day before Chair Powell's speech. I was thinking of going long. Literally right here, my big conviction was that everyone was bearish here, right? And this is the psychology of the market. Everyone gets bearish around the lows and everyone gets bullish around the highs, right? So at this point, the premium was trading around $2 and I was thinking / planning to get long. And I did not. For XYZ reason, I did not. Waited for Chair Powell's speech, Chair Powell confirmation, and Chair Powell spoke, and we got a big squeeze, right? So at this point, the risk to reward for the trade on the premium side was already invalidated because these were literally 2 days to expiration contracts. So SPX opened at 2. Well, basically, when I was looking at the trade, it was at 2 and ended up at 50. In opportunity cost perspective, if I have to put a number, for every $2,000, you are earning $48,000, right? So this is how big the opportunity cost was. Definitely, you do get a FOMO as a trader, but at the end of the day, what differentiates mature traders from immature traders is how you take that point and integrate that into your things to improve and how you move forward from that. Because the biggest assumption behind FOMO is that there's not going to be any similar opportunity in the market again, which is just plain wrong. Having that in mind, the point is how we can integrate such sort of behavior, such sort of trade conviction moving forward. And that is a thing to improve. Some other points, psychology and health. Overall psychology for the month was good, did build on momentum. Emotional control was on point. Discipline, I was on point as well. As said, there were 2 days where I did not really do well. For example, on Friday, where I had minus 4.56 R, that's where the discipline did go out of the window for a little bit, because overall, I am not allowed to go anything above minus 2 R or minus 1.5 R on the day, right? So there was a little bit of tilt factor on the trades, which just did not go well. Usually only traded the morning session. That is my routine. As said, I only try to focus on the A+ setups, only the setups which are in my playbook. As we discussed, these were some of the setups from the playbook, which I integrated into my trading for the month of October. I don't care in general if the market is running, if the market is just going nonstop, XYZ. I really don't care about that. What I care about is if this trade aligns with my playbook strategy. If the risk to reward is good enough to put a trade and take it from there. That helps you a lot to keep your emotions in check and build discipline, right? So I only trade the morning sessions. Also slept fine. Days when I don't sleep well, it affects my trading performance. Again, these are the little things that you as a trader have to pay attention to, because at the end of the day, every single trader is different, right? So for example, for me, there's a strong correlation between my sleeping habits and my trading performance. So these are, again, little things that you have to keep in check. So now moving towards the things to improve. One thing that I have to improve moving forward is the stop loss placement and not micromanaging the trade. As I said, the big 2 days that I had, my discipline did go a little bit out of the window. Did micromanage the trade since that I started the day red and then it just kept on piling onto that red figure. Very tight stop losses that did not work well, right? So this is big improvement point for me to take for the month of November. Approaching the day with less bias, for example, days which were red, I had a bit of bias. But again, as a trader, this is a point that you have to work on, because every single day you should approach the market with the mentality that I do not know what is going to happen today. This is my level, right? This is my hypothesis for the session. If this level is held, if this zone is held, if this area isn't held, if this line of sand, whatever you want to call it, if this is held, this is my hypothesis. I think there's a probability that this could happen. If this zone, inflection, line in the sand, whatever you want to call it, is not held, there's a probability that we could react this way, we could move this way. Right? So every single day you have to approach the market with that mentality. So that really helps you to sort of, have an objective view on the prices, have an objective view on the market, more discipline and emotional control, and only focus on A+ trades, improve more. Now, again, these are some big things that I have to work on for the month of November. At the end of the day, the goal for this exercise is to extract the points where you did not do well, where you did not perform well, what were your mistakes, what were your biggest pain points for the month, and take those points and see how you can integrate, how you can work on those points and improve moving forward, right? So that's pretty much all. This is how I traded. Overall, pretty solid performance. As said, 20R for the month of October. So this is how the month of October was for me. There were some great things which worked out very nicely, but there are also some things that I need to improve on moving forward. I hope you guys liked this video. Let me know how your trading month went. Please comment below, and I will see you guys in the next video.